So this is a massively growing economy. It's productive because it's cheap and easy and fast to move stuff around. Everyone's building businesses on top of it as well. So suddenly we're generating economic growth. So we've got population growth, productivity growth. Yes, there is some debt growth, but debt as a percentage of the asset class is very small. Okay, there's your answer. In economic terms, it makes total sense. When you understand, remember, I've always talked about this equal and opposite reaction. Right. The equal and opposite reaction of a massively over-indebted, slowing population, aging, low productive society and economic system is the complete reverse. And here it is.
Hey guys, welcome to Everyday Finance. There is a tipping point in every market cycle, the point at which gradual rise gives way to full-fledged acceleration. We're right at that threshold, said Raoul Pal, CEO of Real Vision. He refers to it as the second banana zone, when cryptocurrency markets begin to rise vertically instead of merely creeping higher. This has historically been the time of record-breaking, explosive price movement, the kind that transforms modest rallies into full-scale manias. Pal also thinks that history is going to rhyme once more. A strong new wave of capital inflows is being fueled by a confluence of factors, including decreasing interest rates, growing global liquidity, and an uptick in investor confidence. According to him, the market is just beginning its most active stage and hasn't peaked. The build-up to the type of vertical climb that characterizes any real crypto boom is what we are currently seeing. The macro environment, the data, and the charts all suggest that the banana zone is currently forming. Stay tuned for Raoul Pal's analysis of the signs, momentum changes, and charts that verify the cycle's next leg has already begun.
So everyone's getting access, but don't forget, the venture capital has made the access from it being worth, call it $20 million. By the time it goes public, being worth $1 billion. They've made all of that money. And then you've got to bet that it goes from $1 billion to $100 billion, like Facebook. It's doable. Doesn't always happen. So I don't think it's dumping on retail. I think what it's saying to retail is, well, we're the masters of this universe, and if you want access, you're going to have to pay us. Or you're not smart enough to manage your own money. We're going to manage it for you. And we're going to charge you a lot of money because we're smart and you're stupid. And what we've learned is the rise of retail investor is now massive. It was a movement that started with Occupy Wall Street when all the millennials were in their early 20s or still at university or still at school. Then it lay dormant for a while because the system kind of just carried on and they were too busy just starting their careers and lives and stuff. Then the pandemic came and they were given a check and they were stuck at home and they couldn't do their jobs. And for some reason, this whole group of people who had no interest in finance absolutely hated it, treated it like a computer game and went all in. And they did generally pretty well. Yeah, GameStop went boom bust, but a lot of people got into crypto. A lot of people understood technology investing. That's the rise of Robinhood as a company, which is one of the great success stories of our period. What is Robinhood doing? It democratizes access to all of this stuff. The rise of Coinbase, the rise of crypto markets. So people en masse have figured out how to make money without the system. And the answer was just go to a parallel system and do it ourselves. So debt sometimes can be a good thing. A small amount of debt allows you to spend on infrastructure and economy. So when China first started adding debt, they were building roads, bridges, railways, creating the economic engine, making it better, more productive. But then you get to a point where you start having excess debt. Normally that's kind of when you get to something over 70% of GDP, it starts like, that's a lot because you have to pay the interest on the debt. In 2008, the US, the UK, every country in Europe, and Japan, and a few others hit 100% of GDP in debt at the same time. And the companies, the private sector, were 200% of GDP in debt or whatever. So suddenly, it's all debt. And remember, before there was only a few assets at the bottom of this pyramid that's been borrowed against, and it all started falling apart. Why did they accumulate so much debt? It was actually driven by that magic formula that I talked about before. The magic formula of GDP growth is population growth productivity growth and debt growth. As the population started getting older, because the baby boomers were such a large part, they became less productive because they didn't work as much. They start retiring. And what happens is economic growth slows down. Young people stopped having kids, so the whole economic engine is slowing down. So what you do is you start adding to debt to cover the costs of the baby boomers in retirement. What is that? That's healthcare, that's pension systems, that's social security. It's all of these things that they've done. The US has barely invested in infrastructure. When you go to Asia, and you've been to Asia, it's wildly different infrastructure versus here. You know, people think they're third world countries. Go to China. It's like, it's stupidly advanced. But China did the same issue. Their population got old really fast because they had a one-child policy, a few decades ago. And that suddenly meant their population is now shrinking faster than any country in the world. Now, they happen to have a big population. But still, to offset that, they've massively increased debt. What do? They built bridges to nowhere and trains that people didn't use and buildings everywhere. It's just debt upon debt upon debt. And then you've got military spending and the other things on top. And so it's all been driven by demographics. And then suddenly it's a game of musical chairs and the music stops and everyone tries to grab a chair and there's not enough chairs and the whole system collapses. But then now they realize that. And so what did they do in 2008? They did something really clever. Or 2008 and 2009. They said, we're going to print money. Quantitative easing, they called it. It's a fancy name for printing money. Pretend it's really scientific. It wasn't. We're printing money. What did that do? At the time, the collateral layer of the entire financial system was the housing market. And that had collapsed. And then that was pulling down everything with it. And everyone was defaulting on their debt. And nobody could pay back anybody. The whole system was in the middle of implosion. So what you do is, remember, you lower the denominator and magically the value of those assets goes up. Suddenly everyone can service their debt. It stopped the system imploding.
Lower the denominator of what exactly?
Fiat currency, the overall system of money, because it was done by the US, the UK, the EU, China, Japan, Australia, Canada, everybody printed money. And what it did was lower the purchasing power of fiat currency overall, where the dollar is the world's reserve system, and those assets suddenly went up. And everyone's like, we're saved. Nothing had really changed. It was all smoke and mirrors. The system was broken, and they knew it, and everybody knew it. No, not everybody knew it, but people suspected it.
Gold frequently serves as a leading indication for Bitcoin, usually moving around 6 months ahead of schedule per Raoul Pal's most recent analysis. He clarifies that this pattern indicates the cryptocurrency market is still far from reaching its zenith. Although there might be a short cooling-off period in the near future, Pal anticipates that it will only last a little while, a period of consolidation prior to the start of the next explosive phase. According to his data, the next big spike in the banana zone might be fueled by rising global liquidity in April and May of next year. To put it another way, the market is only gathering its breath before the next strong surge of momentum. Let's examine Pal's analysis of why this timing is significant and how. Gold's actions may be a predictor of future developments for Bitcoin and the cryptocurrency industry as a whole.
Because humans are amazing. Life is amazing. The planet is amazing. You come back so much more respectful of people and different opinions. You come back so much more respectful of different ways of life. Because what you read in the media is their life bad, this life good. Freedom, impoverished, awful, crushed people. When you actually go to these countries, it's mainly bullshit. It's just political narrative. You learn so much about what the world is like that it will change you forever in positive ways you don't yet understand. It'll also make your career 10 times more successful because you can understand different perspectives and you see opportunities where others don't. And I used to see this when I was at Goldman. We ran the graduate training program. Yeah. Impossible to get into because at the time, Goldman was the single most aspired to company for MBAs on earth. right? So you just couldn't get in because it was like the best of the best from the best universities. And what we got was a process sausage factory of the top universities, of kids who only wanted to be investment bankers, who spent their spare time getting internships and going to the Hamptons and hanging around investment bankers and acting like investment bankers and dressing like investment bankers. And I turn up, they're fucking robots. And I'm like, you're unemployable. You don't know how to speak to normal people. What do you think the portfolio manager that you need to talk to who's in Sweden has any interest in your stupid American investment banker narrow view on the world? So I used to hire anybody who'd travel, go and do different things and interesting things, because if you haven't been outside your comfort zone, you haven't seen the magic. So after they did that, they did a piece of magic, which was zero interest rates. We need to stimulate demand. Yes, sure. You lower interest rates, people are freed up to spend more money on stuff. But it was more magic than that. That was the smoke and mirrors again. What it was the ability of all the governments to not have to pay interest rates because they've just got all of this debt issue. So they're like, we're going to give everybody a break for 5-7 years. You don't need to pay interest rates. We're just going to keep our interest rates at zero and let all the corporate sector sort itself out. Let everybody sort themselves out by not having interest rates. I mean, how nice would it be for all of us to not have to pay interest on your car or your mortgage or your credit card for 7 years? Be very nice. That's what we did. It was basically a tax break for every government in the world. And so what they did at that point was refinance all of their debt. So they restructured the debt like you might do with a credit card or anything else, with all of your debts, your student loans and all of that, and you restructure into one loan. And that happens to be this between 3 and 5 year maturity. And now that every 3 to 5 years, you have to pay the debt back and pay the interest off it. And so what they do is they keep adding more debt to it all the time. So they are addicted to debt because it's the only way the system exists. If they were to stop printing money, then all of the assets go down 80 or 90% and everybody gets wiped out. So we're paying a fee of 8% a year to stop the system imploding is another way. It's an 8% tax on all of us to stop everything being wiped out, which is another way. So in one way, it looks terrible. They're robbing us of the 8%. The other way is they're stopping us losing all of our thing. It's this weird, fucked up world that we live in. That's why every time a bank starts getting into trouble, like Silicon Valley Bank, immediately some new magic money printing thing to give them money to the bank, because we cannot let an indebted system go under. So world debt to GDP is like, I don't know, it's about 300% for the whole world. Because don't forget, it's not just governments, it's the public and the private sector. Everybody's in debt at every level. There is some countries where household savings are positive, like Japan and China. But their governments and corporates are massively in debt. The other issue is, around the world, 50% of the entire world's debt is actually in US dollars. But most of those countries have a different currency. So they have their own set of problems is, how do I buy the dollars and have the money to buy the dollars? And the dollar goes up and down. It becomes unmanageable. This is why we get this economic cycle all the time, is based on the dollar and the funding of debts. And so it is the system now. And so then I go back to, okay, but then we've got this parallel system that's being built at record speed that is not based on that. In fact, it's the alternative to that, where every asset is recorded who owns it. We have a whole different set of banks there called decentralized finance, DeFi, where they don't even have humans there. It just happens via code. Okay, that's super interesting. We've got this whole new version of safe savings, which is Bitcoin. We've got a whole new system of the internet where it's less abusive of us as people. And that's all being built in a financial system. So I think of it as an old world, which is this debt-laden world of slow growth, where the whole thing is servicing the baby boomer industrial complex or retirement complex. And then we got this new world. And this new world is like the United States 150 years ago. It's attracting all the migrants because the opportunities are much bigger. And we're getting a population growth. So remember the magic formula? Well, over here, this new world is seeing massive population growth. In fact, we've gone from 500 million people in this economy to 1 billion people in 1.5 years. So this is a massively growing economy. It's productive because it's cheap and easy and fast to move stuff around. Everyone's building businesses on top of it as well. So suddenly we're generating economic growth. So we've got population growth, productivity growth. Yes, there is some debt growth, but debt as a percentage of the asset class is very small. Okay, there's your answer. In economic terms, it makes total sense. When you understand, remember, I've always talked about this equal and opposite reaction. Right. The equal and opposite reaction of a massively over-indebted, slowing population, aging, low productive society and economic system is the complete reverse. And here it is.
Raoul Pal's liquidity models correctly identified the market bottom in 2022, indicating the start of a fresh, long-term upward trend. At that point, his team began amassing high-conviction assets, such as Solana, which subsequently produced exceptional returns. By 2024, Pal said the banana zone had officially begun as Bitcoin surpassed its prior all-time highs. Subsequently, the price of Bitcoin surged from $52,000 to $118,000, signifying the first phase of the cycle. Pal claims that the present market decline is really a stop within the same potent structure and is not the end. It's a natural reset before the next leg higher, he says. He claims that the majority of investors make the error of mistaking these brief consolidations for the cycle top. In retrospect, however, the entire pattern consistently forms a single, long vertical climb, which is the actual geometry of the banana zone. Pal thinks the move will be much more important this time. As global liquidity increases once more, the surge may continue for a longer time with stronger price movement. According to him, the banana zone is only getting started and won't stop anytime soon.